Good morning. Thank you for joining AMRO's press briefing today on the quarterly update of the ASEAN+3 Regional Economic Outlook. I'm Daisy Wong with AMRO's communications team. Let me first introduce our speakers today. Sitting next to me is Dr. Ho-Yi Ko, Chief Economist of AMRO.
Hi.
And joining us also is Mr. Alan Ng. He is Principal Economist and Group Head of Regional Surveillance. Before we move on, I want to make clear that the embargo of the AREO report has just been lifted. It has ended at 10:30 Singapore time this morning. And we'll start today's briefing with a short presentation of the outlook by Alan, and then Dr. Ko and Alan will be happy to take your questions. While you are listening to the presentation, please feel free to send us questions via the WebEx chat box, and please also mute your microphone. And without further ado, I'll give the floor to Alan.
Thank you, Daisy. Good morning, everyone. Thank you for joining us. So in this presentation, I will provide you with an overview of our ASEAN+3 Regional Economic Outlook, the July update, which is an update of our outlook in April earlier this year. So overall, we have three key messages for our July update. The first one is that momentum is sustained. Now we are more confident and have greater clarity that the ASEAN+3 region is on track to achieve a steady growth this year, driven by resilient domestic demand and a recovery in external demand. Second, inflation is easing. So inflation continues to ease. In fact, we are revising downwards slightly our projection for inflation this year. But we can't rule out the possibility of higher inflation, especially if supply shocks in terms of commodity prices and shipping costs escalate further. Lastly, downside risks remain. And this is particularly so for later this year and the next, especially in relation to risks that could come from the United States in terms of the uncertainty in the monetary policy direction, as well as the outcome of the presidential election. This underscores our policy recommendation earlier this year on the importance of rebuilding policy space and to maximize resilience, given that we are now in a relatively positive economic condition, so that we are better prepared for any future shocks. Now, let me go through some of the details of our update. Growth momentum continued to strengthen across ASEAN+3 since we had our last assessment in April. Private consumption in the region remained resilient, supported by strong employment conditions and easing inflation. Retail spending has also generally picked up in most economies. From the external front, recovery is underway in goods exports of the region, barring the decline in March that you can see in the chart on the left-hand side, which was actually due to base effect, mainly coming from China. Demand for the region's exports have actually held out since the start of the year, especially when compared to the preceding 5 to 6 months. In addition, tourism are also approaching pre-pandemic levels. Total ASEAN+3 tourist arrivals are now at about 90% of their 2019 levels. A key factor that is underpinning the recovery in external demand is actually the turnaround in global semiconductor cycle, which has actually broadened in two important regards. First is that it has broadened from just a bellwether market like Korea to more economies in the region, especially ASEAN. Second is that it has broadened to also more products beyond the highly advanced segment, which has initially drove the recovery in the global semiconductor cycle. Looking forward, the latest indicators that we are seeing point to continued recovery in exports in the region through the third quarter of this year. And this will be supported by improving activities in our export markets, as well as relatively lower global uncertainty compared to earlier part of this year. Now, moving on to inflation, we continue to see disinflation, but higher energy and transportation prices have altered the broad decline in headline inflation across the region in the recent months. Nevertheless, we anticipate this to fade away, and the baseline scenario, we expect moderating inflation to continue going forward. On financial conditions, uncertainty around the US interest rates has weighed on ASEAN+3 financial markets in equities and bond markets. And most of our currencies have continued to weaken against the US dollar, although we have seen some respite in recent weeks. Reflecting all these developments in our latest forecast, the growth projection for ASEAN+3 this year and the next are broadly unchanged from our April assessment. This year, the region is expected to grow at a steady pace of 4.4%, with ASEAN improving from 4.2 to 4.8%, 4.2 from in 2023 to 4.8 this year. And the +3 economies, the projection remain unchanged at 4.4%. For next year, we expect the region to expand by 4.3, slightly higher than what we initially projected in April, as the region's economies converge to their trend growth. This is our detailed inflation forecast. For the whole region, excluding Laos and Myanmar, inflation is expected to ease to 2.1% in 2024. This is down from our initial projection of 2.5%. Higher demand pressures could emerge in 2025 next year as economic momentum gains traction, but these are unlikely to trigger large spikes in inflation in the region under the baseline scenario. The inflation forecast for next year remains unchanged in our July update at 2.3% for the whole region, excluding Laos and Myanmar. There are a few risks that could impact our baseline forecast. Generally, however, the overall balance of risk to the outlook has become more positive since April. That said, we are monitoring closely a number of risks, and these include first, potential spike in commodity and shipping prices, especially if geopolitical tensions worsen. Second is the tighter than expected US monetary policy. Now, under the current expectation, the Fed is expected to ease towards the end of this year. If this does not occur, it could lead to tighter financial conditions for the region. Third is the adverse spillover from the US presidential election. This is especially true if the likely outcome points to further escalation in the US-China trade tensions or higher inflation prospect for the US. In addition, the region continues to face a variety of long-term risks, but more recently, given what we have seen since April, risks of geopolitical tensions are now more salient. Our assessment of the risk landscape is actually informed by the results of our survey to member authorities in the ASEAN+3, the central banks, as well as the ministries of finance of the region. Broadly, we find that members' perception of economic conditions have actually improved. About 30% indicated that they are seeing now than the previous 6 months, whereas the remaining 70% indicated that conditions are generally the same. No member authority indicated that conditions have worsened. The chart on the right shows how our members sees the evolution of risk between October last year, when we last did the survey, and June this year. Now, what we can see is that the concern on cyclical risk has receded a bit, but geopolitical risk has actually become more significant. Now, this is not in the chart, but some of the key geopolitical issues that members have identified include the possible re-election of President Trump, escalating tensions in the Middle East and in other parts of the world, and increase in protectionist trade policy globally. Now, just to reiterate, growth momentum in the region is sustained, given resilient domestic demand and recovery in external demand. Inflation is easing, but we cannot rule out potential escalation in commodity and shipping prices that could derail the moderation in inflation. Lastly, downside risks remain, especially for the later part of this year and the next, which underscores the importance of the rebuilding of policy space. Lastly, today, we are also launching the Regional Economic Dashboard, or RED. It is our latest data visualization tool featuring all the key macroeconomic and financial indicators for the ASEAN+3 region, all of them updated daily. The data featured can also be downloaded, and even the charts can be copied. So do check it out. With this, thank you.
Okay, thank you, Alan, for the presentation. So we can start the Q&A session now. We have actually received quite a bit of questions from you, some of you in advance, so we'll try to answer them as much as possible. But please feel free to continue to send us questions via the WebEx chat box as we speak. So we have a question, similar question from a few media on the Chinese economy, actually. Including the China Daily. The question is, China released its second quarter GDP growth figure yesterday. How has this been factored into your forecasts, and how will that affect the region's outlook?
Thank you.
Dr. Koh?
Thank you, Daisy. Yeah, indeed, China's first quarter forecast came out yesterday, and it was 4.7, which was lower than what we were expecting. So for the first half of the year, it's about 5%. As you know, our forecast is 5.3% for the whole year. So it's below our forecast, but we had always stated that we are somewhat on the optimistic side. And in the first quarter, it was spot on, around 5.3. But unfortunately, the second quarter has turned out to be somewhat weaker. But when we look at the breakdown, export was very strong, which was what we had expected, that the external demand be a tailwind for the region. And indeed, external demand picked up very strongly. Unfortunately, I think domestic demand was somewhat weak. And again, I think we had expected that to some extent because the real estate sector was weak and it continued to be a drag on growth. What we didn't expect was that retail spending was weaker than also pretty weak. Although online spending was very strong, but other components of spending was relatively weak. So as a result, I think the second quarter turned out to be somewhat weaker. Although for the first half, it was a 5%, that spot on in terms of the target by the Chinese authorities. This reminds us of the profile last year when the second quarter also turned out to be very weak. But in the second half of the year, last year, if you remember, the economy picked up very strong, robustly, despite the fact that there was a very strong tailwind. So this year, I think we expect that the growth will be a bit bumpy, but that the second half will strengthen because we know that the third plenum is ongoing, and they are likely to come up with some measures to show up growth in the second half. So, but we'll be watching the data closely, and and if necessary, we'll revise the growth in our next forecast. So let me stop here.
Thank you, Dr. Koh. There's a question from Yitai Media of China. I see Yago is online. Yaga, do you want to ask the question or? So, okay, let me read out a question. For the ASEAN+3 region as a whole, especially Japan and ASEAN, how much the tourism sector contributes to this region's economic growth this year? And if this momentum will decline in the second half of this year? Alan?
Yeah, I can take on this question. I think in our forecast and our projection, the expectation is that improvement in tourism activity will be a very important supporting factor to our growth forecast. We expect tourism to continue to recover. Now it's at about 90% of the pre-pandemic levels, and we expect this trajectory of improvement to continue to persist, and we anticipate the full recovery by 2025. In terms of contribution to the economies of the region, tourism is actually very important. In ASEAN, for example, about 10% of the GDP is actually contributed by tourism, both direct and indirect. Some countries in ASEAN even more so, like Thailand and Cambodia, more than 20%. So we do anticipate that our assumption is that continued recovery in tourism, and this will support our growth projection. In fact, we also identify tourism as a potential sector beyond just the near-term growth. We are also looking at it as a potential growth driver for some of the economies in the region. There's a lot of potential in turning tourism to growth sector, especially for some of the countries like Thailand, in areas that are higher value added in terms of tourism itself, such as in health tourism and ecotourism. So yeah, overall tourism, we expect continued recovery, and it's an important supporting factor to our growth forecast. Thank you.
Thanks, Alan. Okay. And then there's a question from the Wall Street Journal, Fabiana. Do you anticipate a rise in protectionism in the region as tariff battles are waged elsewhere? What's at stake if the region does erect some trade barriers, and what does it stand to lose if it doesn't? Yeah, that's from the Wall Street Journal.
No, we don't expect the region to, to impose more protectionist measures. The region has prospered or thrived on the basis of free trade and globalization. And I think for a small open economy in the region, they need to remain open in order to be able to take advantage of the global market. So yes, indeed, sometimes some of the countries may put on some restriction in terms of exports or imports to protect the domestic industry. But by and large, we expect the region to remain open and committed to the rules-based multilateral trading system.
Okay, thank you. Thank you, Dr. Koh. Okay, that's Wall Street Journal. And then there are some other questions from the ASEAN region. How can ASEAN capitalize on the trade tensions between US and China? It's similar.
Yeah, ASEAN
from
has
the start.
been very fortunate in the sense that it has benefited from the China Plus One strategy. And you can see that from the inflows of foreign investment in the last few years. There's been a lot of inflows into the region, especially Vietnam, Thailand, Malaysia, and also to Indonesia and Philippines. So I think the region has benefited because of the tariff measures imposed by US on China and vice versa. And so many of the MNCs have taken a China Plus One strategy to relocate or to their production to ASEAN countries, and use that as a platform to export to the US. But it's not only ASEAN countries that benefited from this, other countries too, like Mexico, for instance, and also some of the, I think, African country. This is an ongoing process to some extent, this reshoring of production by companies, but it has been given impetus because of this tension between the US and China. So we expect the ASEAN countries to be a beneficiary if they continue to, benefit from this China Plus One strategy.
Okay, thank you, Dr. Koh. I think we also have some questions on more country specific. Let me move on to Indonesian press. There's a question from Content. What's your view about Indonesia economic prospect in the second half of 2024? Are the programs from the new government can boost the economy in the next 5 years?
Indonesian economy has been amazingly resilient. It's been growing at around 5% the last few years, notwithstanding the many shocks and headwinds. In the first quarter, the growth picked up to 5.1%. And for the whole year, we expect growth to be around 5.2%, so slightly higher than last year. So this is a very robust growth, and the program of the new government, which will take over, I think, sometime in August, October, is a continuation of the policy from the current government. So we expect that there'll be very little change, and that the economy will continue to grow at about the same rate. So we expect that growth will be sustained at around 5.2% this year. Yeah.
Okay, thank you. And there's a question from Business Indonesia. Is there any particular risk for Indonesia as it goes through a political or government transition period?
Not that we can see, because I think we see a lot of continuity in terms of the policies. The next government basically won the election with a very decisive mandate, and as you know, the new president will be vice president of the current government. Obviously, they have their own some new policy measures that we can see, but there will be a continuation of many of the policies under the current government, particularly the development of infrastructure, which is a weakness in the Indonesian economy, and also to liberalize the regulatory regime to attract more investment. We know that there is also part of the policy to provide free lunch for students, which we strongly support. But this is one of those measures where I think the new government should be quite cautious, because they need to make sure that there's sufficient fiscal resources to support this. Our estimate is that it's going to be about 2% of GDP. But apart from that, I think we feel that the Indonesian economy fundamentals are relatively strong, and it can continue to grow at around 5+%. And with the new investment that they are attracting, they might even be able to raise the growth potential above 5.
Okay. We have quite a bit of questions from the press in the Philippines. Let us move to that country. What will be the main barrier to investments on the Philippines? Investments in the Philippines.
Well, Philippines has the Build program under President Duterte, and then under President Marcos, there's the Build Better More. President Marcos. So that's one of the weakness in the Philippine economy, the infrastructure gap. And I think the government is very conscious of that and is trying to fill the gap. Unfortunately, I think fiscal space has been used up to some extent during the pandemic. But our assessment is that there's still moderate fiscal space in the Philippines, and that they need to crowd in more foreign investment to help to complement the domestic savings. So that's one of the areas where I think that the Philippines need to work on, together with a liberalization of the regulatory regime. The investment regime is somewhat more restrictive than some of the other peer economies in the region, and we see that they've taken steps to liberalize the measures, and they have managed to attract quite a bit of investment in the first half of this year. So we think the policy measures by the government will continue to attract more investment, and also with the improvement in infrastructure gap will help to lift the growth potential.
Thank you, Dr. Koh. There's a question online from Manila Times. Do you want to ask it? See if she can mute. Okay. Then let me ask the question. So it's from Manila Times. AMRO has revised this year's inflation forecast for the Philippines downward, but raised it for next year. Could you explain the reasons for these revisions and the risks you see in the outlook? When do you expect the BSP to begin easing rates, and by how many basis points?
Yeah, the Philippine inflation was relatively high compared to other countries in the region. But more recently, the disinflation seems to have picked up momentum, and inflation has come off more faster than expected. So as a result, now the inflation number is now within the band. But even so, I think the government has been very cautious and said that it's going to maintain the current relatively tight monetary policy until inflation is come down more decisively. So we really supported that. At the same time, the economy is doing well. It's growing at around 6%. We had expected it to grew at about 6.3 previously, 6.1%, sorry. So that's a pretty strong growth for emerging markets. So I think the government has a lot of flexibility in deciding when we can lower the rates. Yeah.
Thank you, Dr. Koh. Okay, there's a question from the Hanoi Times. So it says, what are the challenges for Vietnam's economy for the later half of 2024? What measures should the country take to address them?
Vietnam was hit quite badly last year by the downturn in external demand, and so growth was somewhat weaker last year. So we can see from there was 5.1%, which is somewhat weaker than expected. But this year we expect growth to benefit from the turnaround in external demand. So we have upgraded our forecast for Vietnam to 6.3%. So Vietnam is one of those highly open economy that benefit from from trade, and so this is going to be a very strong growth year for Vietnam. In fact, it's going to be the highest in the region. Obviously, there are patches of weaknesses in the economy because the growth is a bit uneven across sectors. The real estate sector, for instance, is still struggling from a downturn, and we think that there is scope for the authorities to take targeted measures to help to revive the real estate sector. And also the vulnerable groups, the SMEs in particular, many of them are still lagging behind the recovery. And because Vietnam has ample fiscal space, we think they should use it to help support those sectors.
Thank you, Dr. Koh. Okay, we continue on the country-specific question. Now move on to Malaysia. There's a question from Banana. Does Malaysia's implementation of floating diesel prices affect its growth outlook?
The subsidies?
Yeah, floating diesel prices, rationalization.
Oh, yeah, I think we strongly support the rationalization of subsidies because they are too broad, and so we support the shift from the current subsidy regime to a more targeted regime, where so one way to do this is to remove the subsidies in phases and use a cash transfer to support the low income group, so that they can mitigate the impact of the higher prices on them. And so we feel that this will also free up fiscal space that they can use for other more growth enhancing type of expenditure. So they have already done that with diesel, and we think and our expectation is that they will go on with lifting the subsidies on the RON 95. So that is quite painful, we understand, but it's a measure that is going to be well received, I think, by the investment community, and and I think it's needed to help Malaysia, for instance, focus more on other areas of expenditure. Thank you.
Thank you, Dr. Koh. But we need to continue on Malaysia. We have several more questions on Malaysia's economic outlook and the currency, including questions from Xin Chao, Naya, and The Edge. Let me read the questions on the outlook first. They say Malaysia's 2024 growth forecast has been revised from 5% to 4.7%. What are the reasons? And what is the projected outlook for the Malaysian economy this year? And what are the key factors that will influence the projection?
Yeah, as you can see, we have shaded down the growth forecast for Malaysia from 5 to 4.7. But it's a very strong pickup from last year, 3.6%. And the main reason for shading down the growth somewhat is because the export sector has been a bit slow in terms of picking up, unlike some of the other countries. But it's still a very strong growth, and we expect that to pick up further next year to 4.9. So part of this is the profile of the recovery in terms of the export side, a bit weak on this year, but a bit stronger next year, because we expect that Malaysia, because it's specialized on semiconductor and electronic sector, will benefit from the upturn in the electronic sector. It's just that countries are at different phases of the supply chain, and in the case of Malaysia, they are at the back end, and the back end tends to benefit from this upturn a bit more slowly. So, but in any case, we see growth as very, very robust, supported by the upturn in export, fairly resilient domestic demand, and also a lot of investment that has come in the last few years. They will be implemented this year and next year, and that will help to drive the economy as well.
Okay, thank you, Dr. Koh. And then on the currency part, some of the press is also interested on the ringgit weakness. A question is, how about the performance of the ringgit up to date? Do you see it will be it will have better performance this year?
Well, the ringgit has been performing well since February, and that's because the economy has done well, and also they've taken some measures to encourage the DLCs and DLICs to repatriate their investment earnings. So that has helped to support the forex market. But also the economy, as I mentioned, is benefiting from the turnaround in the external headwind. So they would also help to support the balance of payment at the same time. So if you look at last year was a weak year for the ringgit, so the ringgit depreciated somewhat. But last year, as I mentioned, there was a very strong headwind, and it hits all the economy. So it's not just Malaysia that currency that weakened, but many of the other regional currency as well. And this year, there's been a turnaround in the external demand, and also because of the measures taken by the authorities, we think that ringgit will be somewhat stronger than last year.
Okay, thanks, Dr. Koh. As we go to the currency question, there's a question on how do you expect the weakening of the Indonesian rupee and other Asian currencies against the US dollar in the coming months? What will be the effects?
At the moment, I think a lot depends on what happens to the Fed policy. So now the expectation of the market is that the Fed will, have cut the policy rate by 50 basis points, whereas the Fed's dark plot only indicates one cut in the policy rate. So if indeed inflation interest rates stay higher than expected, I think we can expect the regional currencies to weaken somewhat. On the other hand, if the Fed indeed goes through with cutting the rates by 50 basis points, I think that would weaken the US dollar and strengthen the regional currency. So this is what you call the carry trade, in the currency market. It's very much driven by, relative interest rate differential between the Fed and the regional currency.
Thank you, Dr. Koh. As we talk about currency, there's a question from Singapore's Business Times. Roger, are you there online? Do you want to
Hi,
ask?
Daisy. Yes, thank you.
Roger, thanks for joining us. Could
Thank
you
you for inviting.
tell us your question?
Yes. So I'm curious, how come Japan saw a 0.5 percentage point cut in its growth forecast? Thank you.
Sorry, I think.
So it's a question you type in the chat box. Why did
Yes, correct.
Japan see a 0.5 percentage point cut in its growth forecast?
Japan.
Yeah.
Oh, why did we cut Japan's growth forecast by half?
Yeah, 0.5%. Yeah.
Okay, thank you. We have shaded down Japan's growth this year because, as it turns out, the first half of the year was very weak. As we all know, consumption in particular was very weak, even though investment was okay. So because of that, we had shaded down the growth from 1.1 to 0.5. This is very much in line with actually what the analysts are doing as well. But we do expect the economy to begin to recover and strengthen. So next year we're expecting growth to be about 1.4%, which, as you know, is pretty high for Japan, from the 1%. So basically, again, is a shifting of the growth profile from this year to next year. So this year we have shifted it down by from 1.1 to 0.5, but we are pushing it into next year. Because if you look at export as well, export from Japan has been pretty weak in the first half.
Thank you, Dr. Koh. Okay. Let's move on to a more broad outlook. There's another question on the Wall Street Journal. Which central banks looks best placed to start cutting rates ahead of the Fed? And actually, there's also a question from the Philippine Daily Inquirer. It asks, can the BSP cut ahead of the Fed? And it also wants to ask about why did AMRO cut its growth forecast on the Philippines for this year and next. So I let you answer the question on start cutting rates ahead of Fed first. And yeah, that's a specific question from the Philippines on BSP.
When the central banks are ready to cut, right?
Yeah.
Well, the central banks are all, as I said, waiting for the Fed to move first. Although some of them probably have, room to cut now if they wish to. Well, we should remember two things. One is that inflation is pretty well anchored in the region, and growth has been pretty robust. So that gives the central bank a lot of flexibility in when to cut the rates. But central banks are holding back because it's putting the exchange rate is pretty weak, but they're all weakening together mostly, so there's no issue of competitiveness. And the pass through from a lower exchange rate into higher prices is also very, very low. So as a result, central banks are waiting because after all, the growth is pretty strong, and there's no reason for them to cut the rates now to support the growth. But certainly, I think some of the central bank may want to move ahead, especially once the Fed begins to cut. So if we look at, as I mentioned earlier, in the case of the Philippines, inflation has finally come off the peak, and they're within the target band now, and the government has indicated, that they're ready to move when the Fed move. Also, some of the other, in the case of Indonesia, we know that they had raised rate earlier in order to support the exchange rate. But in terms of growth and inflation, they are pretty well placed to cut, whenever they want. So it will depend, on the country, from country to country, the balance between growth and inflation. But fortunately for most of the country in the region, I think growth is quite robust and inflation is low, so they have a lot of flexibility in when to move. Yeah.
Thank you. I think we just have time for a few more, maybe 2 or 3 more questions. But
I think the Philippines media also asked about our revision to our growth.
That's why I want to repeat now.
Why did we cut our growth?
Yeah, the Philippines Daily Inquirer asked about why did AMRO cut its growth forecast on the Philippines for this year and next?
Yeah, no, we've shaved it down from 6.3 to 6.1, right? Which is, in light of the data that comes out in the first half of the year. So as I said before, we are always looking at the data very closely, and reviewing them. And as you can see from the table, we have shaved down the growth for not just the Philippines, but many of the countries in the region. Because as it turns out, as I mentioned, the recovery in the external sector was weaker than expected. And in some of the other countries, like in the case of China, the domestic spending has also been strong enough. On the other hand, within the Philippines, growth is pretty robust, and will pick up next year to 6.3%. So this is well within, I think, the official range of 6 to 7%. We are on the low side, but we look at the data closely, and indeed, and we may revise it up if the second half the data shows that the economy has picked up more strongly.
Okay, thank you. I think the very last questions that is on the region's broader outlook. There's a question from the Star. Will there be repercussions on the region's growth outlook should Donald Trump win the US presidential elections in November? That's a question from the Star, and there's a similar question on what are the key risks to the region's outlook.
Yeah, I think that's the big uncertainty hanging over the region right now. Of course, after the recent shooting incident, Trump's rating has gone up in terms of his, and Trump has announced several policies, which I think is will be quite adverse for not just the region but many countries. So we are looking at this very closely, and we will, review our forecast for next year in particular, because the election is in November, and try to work out what the implication is for the region. Yeah.
Okay, thank you very much. I think we have to conclude the press briefing here. And so thank you for your participation. You can visit the AMRO website to download the AREO report and access other information. And we'll have the next AREO update in October. And if you still have more questions for us, please contact AMRO's communications team. Thank you. Thank you, Dr. Cole, and thank you, Ellen.
Thank you, Didi.